This oil shock is unprecedented because it is the first time where we've had supply increasing and demand decreasing. And usually in the past, it's one factor or the other. But with two factors moving in opposite directions, this has put tremendous strain and quite a big shock into oil prices. During the latest OPEC meeting, we had an unprecedented outcome where the OPEC Plus, which included Saudi and Russia, could not come to an agreement in terms of a production cut. This ultimately led to prices tumbling down 25% into the $30 range. What has really happened here is a market share war where Russia is digging their heels in and taking back their market share. In response, Saudi is doing the same thing by lowering their pricing discounts to its customers. Ultimately, this is going to result in production coming onto the market and pricing being depressed for the foreseeable future. In terms of if anyone is going to back down at this point in time, and the situation is quite fluid, but Russia and Saudi Arabia seem to be at very opposite ends of the table in terms of how they see managing the overall oil markets. Anything can change with geopolitical risks. That's always an unknown at this point, but at this point in time, those two parties are at far ends of the table, which leaves the next biggest producer, which is U.S. shale, to really backstop the supply gap, and in this case, it's reduce supply to get markets back to normal. It's going to probably take the better part of a full year to get to balance, and ultimately an improvement in oil prices back from the 30-somewhat dollar levels back to the $50 levels, which we see as more of a fair value for where oil should trade. The other thing that we're looking at is going forward into the June OPEC meeting to see if Saudi and Russia could get back to the table and potentially negotiate a production cut to further balance the market. Yeah, coronavirus is still going to be a significant impact to oil markets. We came into 2020 expecting about 1 million barrels a day of demand growth. This is all but eroded to zero, in fact negative. Coronavirus has done a significant impact in reducing demand growth around the world, and this is just going to continue for the foreseeable future. It's hard to get a sense of what levels of demand and how long the virus is going to play out, and so that's something we're going to continue to monitor through the volatility of oil markets. Yeah, for the Canadian investor out there, they're going to still continue to see a lot of volatility in oil markets. We've seen a lot of volatility in the past several years, and we expect that to continue. I think at these certain price levels, it's prudent now to pick away at very high quality companies at valuations that you haven't been able to see in the last 5, 6, 7 years. And so picking away at high quality oil sands type assets, which are going to be around for the foreseeable future, is probably a prudent move to buy the best businesses at attractive price levels.